My name is Max Preventure. I'm an executive board member for Maine FBLA and the Searsport FBLA chapter president. I'm making this video to serve as a guide for what the investment banking industry is, who the major players are, and how they compete with one another. Across all industries in any sector of businesses, you will find competition between businesses. And one industry that I'm interested in is a particularly competitive environment. It is the infamous investment banking industry. Investment banking has a reputation as a greedy and money-hungry industry. The industry has evolved over time, but the core principle remains the same: to help businesses and clients achieve the right outcome in respect to monetary decisions. This is a rather general statement, but investment banks do a myriad number of different things, ranging from pure research to equity and commodity trading, as well as traditional banking stuff like debt, raising capital, and mergers and acquisitions. The industry is further broken down into a few categories, starting with the largest banks, which are known as bulge bracket investment banks, and work on the largest deals and offer all the products and services a client could need. Boutique banks work on similar sized deals, however, they usually specialize in what services they offer and what they provide. Middle market banks are similar in scope to the others, but tend to work on much smaller deals. Most people recognize the big 8 investment banks, consisting of JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, Citigroup, Barclays, Deutsche Bank, Credit Suisse, and UBS. Some of the well-known boutiques are Lazard, Evercore, and Moelis. And one of the best-known middle-market banks is Jefferies. Investment banks compete in many different ways. One of the most obvious ways in which they compete is for clients. There's a very finite number of businesses that need capital, need debt, and that want to buy and sell other companies, right? So investment banks rely on these transactions to make money. It's their business model. Losing or gaining a big client can make a significant difference to the bottom line of these banks. So it's in their best interest to keep clients happy. At the end of the day, investment banks are similar to matchmakers. They maintain, create, restore, and repair relationships. Investment banks are also competing for people. Investment banking is all about personal connections and relationships. And investment banks need the best people to make sure that their business is successful. This competition is seen early on, with nearly every bank offering aggressive college internship programs that mint new bankers and continue to offer more lucrative incentives to go with different banks. Beyond this, investment banks compete in more specific areas, like product offerings, services, locations, and brand recognition. But above all, the most important arena that investment banks compete in is what they charge. After all, this is the core principle of how these businesses make money, and it's what they tend to compete the most on. Every bank has a different strategy and pricing model when it comes to loans rates, service fees, and consulting fees. These rates have always fluctuated at different banks, but overall, the competitive environment of rates underpins the core of the industry, and that is to maximize the profit of every transaction. Now, some banks will try and make more money off of one area, and some will try and make more money off the other to differentiate themselves. But at the core of it is trying to maximize the profits for that specific business. And investment banks do provide important services to help businesses grow and expand. They're there when a business needs to take on debt to expand, but also there when the business wants to sell off assets and help pay down debt. The industry itself has remained unchanged for many years, but with the expansion of technology, and the industry is starting to adapt. Goldman Sachs recently introduced a mergers and acquisitions app to help pair clients and identify what businesses are interested in doing. This was big news for the industry, and I'm sure that technology will continue to get better over the years, and that investment banks will continue to compete for clients, people, rates, and more recently, technology.